Michael Burry, a prominent hedge fund manager, recently shared a warning of an impending financial crisis even larger than the 2008 housing market collapse. He stated that the next crash will be far more severe than the previous one and will have a profound impact on an entire generation, comparing the situation to the saying, "When it rains, it pours." The year 2022 saw a decline in the economy, particularly in the stock market. In this video, we will delve into why Michael Burry was so confident about the previous financial crash and what leads him to believe that an even greater crisis is impending, one that will have a lasting impact on a generation. Additionally, we will examine how you can protect yourself and your loved ones from potential risks and financial losses. The 2008 financial crisis, also referred to as the Great Recession, is a familiar event to many of us. It served as a wake-up call, reminding us that not everything in life is easy and that it's important to always be prepared for the worst. Financial crises can be a difficult time for the average person, but it can also be a golden opportunity for professional investors. This statement holds true, as seen in the recent COVID-19 pandemic, where some people suffered losses while others, like Elon Musk, made significant gains and eventually became the richest person in the world, surpassing Jeff Bezos, the billionaire founder of Amazon. Before continuing, we have a small task for you. If you are finding this content useful, hit the subscribe button, like the video, and turn on your notifications to stay updated on our latest videos. Michael Burry was born in 1972 and started his career as a resident doctor in neurology at Stanford Hospital before becoming a pathology resident. He then made a transition into hedge fund management and began focusing on investments in companies with great potential for growth or value appreciation. During his time as a fund manager, Burry witnessed the aftermath of the dot-com bubble burst and the 9/11 attacks, which further damaged the already struggling economy in the United States. Recently, Burry has predicted an epic crash in the stock market, crypto market, and other assets, leaving many to wonder when this will happen. Michael Burry has a history of making bold predictions about financial crashes. He previously predicted a similar event, which came to fruition, and many people are worried that his recent claims about an impending market crash could also prove to be accurate. In 2000, Burry shut down his website, where he offered investment advice, and instead focused on managing his own hedge fund named Scion Capital. He is a self-taught investor who started Scion Capital with just $800,000 in seed money, and within just 4 years he grew it to over $600 million in assets under management and had to reject money from new clients in order to better manage his existing investment deals. Burry has always had a desire for starting his own investment firm, and he invested a significant amount of time and effort in studying and preparing himself for the venture. He was widely recognized for his expertise and wise investment choices, attracting many clients to invest with him. With his sharp understanding of the market, he was able to identify potential dangers and adjust his investment strategies accordingly. For example, when he saw that subprime mortgages and related bonds were at risk of losing value, he decided to short the market. Some of his clients were initially wary of his decision and pulled their investments, but eventually, his foresight proved to be the right call. Those who trusted in him saw substantial returns, proving that taking calculated risks can be a life-changing opportunity. Burry's prognostications have now established him as a widely recognized figure globally. He has numerous supporters on his social media platforms who are always eager to see his latest posts. Michael Burry serves as a prime illustration of the significance of research and thorough examination. He devoted months to carefully examining data and scrutinizing the subprime mortgage industry prior to making his pivotal investment. This meticulous preparation and examination was richly rewarded in the end. Burry's recent deleted tweet in September regarding the crypto market meme and potential crash should not come as a surprise. It is important to critically examine your investment decisions to avoid incurring losses. While you may believe that the economy is not deteriorating enough to result in a severe recession, current events indicate otherwise, as evidenced by the sharp decline in the S&P 500 index. To protect your investments, it is advisable to be cautious and consider alternative strategies. One option is to invest in companies that are less susceptible to market downturns. Another approach is to diversify your portfolio by allocating funds to different asset classes, such as bonds, real estate, and cash. By diversifying your investments, you can reduce your overall risk and safeguard your portfolio from any losses. When the stock market suffered a massive dip in 2008, many were certain that it was the beginning of the end. However, as we now know, that was far from the truth, and the Great Recession was merely a bump in the road. The future holds even more remarkable highs and lows in store. For example, the value of Bitcoin plummeted 66% from its peak of $65,000 in November 2021 to as low as $19,000 in October 2022. This trend supports Michael Burry's prediction of a potential market crash. Hence, it is imperative to be cautious and strategic with your investments. Don't put all your eggs in one basket and aim for a balanced, diversified portfolio to minimize risk. Burry alerted several contributing elements that could lead to another major financial downturn. He cites excessive debt, excessively priced assets, and a lack of concern among investors as causes for concern. He believes the next market crash could happen sooner than anticipated and suggests taking preventative measures now. Burry compares the current economic state to that of December 2007 and believes we are in a perilous situation. He compares the situation to an overcrowded theater where everyone is trying to leave through a small exit, and as they all rush to get out, they end up either crashing into each other or getting trampled. Different nations are implementing various methods to control the escalation of the US dollar against their own currencies. Some nations are meddling in the foreign exchange market to buy their currency while selling dollars. Other nations are giving their currencies greater flexibility by allowing them to float more freely. Additionally, some countries have raised their interest rates to make their currencies more alluring to investors. Recently, the pound saw a historic low of $1.1407 compared to the US dollar, a phenomenon that last occurred on February 26, 1985. Despite the market turmoil, Burry maintains that the worst is yet to come. If this prediction proves accurate, it could mean that we're headed towards a crisis worse than the Great Depression. The crypto market took a steep drop in May due to a complex series of events including the aftermath of the COVID-19 pandemic, skyrocketing inflation rates, the collapse of Terra Luna, the Russia-Ukraine conflict, and supply chain disruptions. These factors led to a decline in demand for cryptocurrencies and a resulting drop in their prices. The situation was compounded by a large number of investors who had rushed into the crypto market in search of quick profits and promptly sold off their assets when the prices started to drop, worsening the market decline. But in the end, what does a market crash signify? A market crash is characterized by a steep and abrupt drop in asset values and often results in a state of panic selling. This can have a significant effect on the economy. Although market crashes can happen in any asset market, it is most commonly associated with the stock market. The trigger for a market crash is usually an unexpected event that instills doubt in the future potential of the market, leading to a fast and drastic sale of assets as investors try to preserve their capital before prices drop even further. A market crash can have far-reaching consequences on the economy. When the prices of assets fall abruptly, it leads to a loss of confidence in the financial system, and this, in turn, can cause consumers and businesses to reduce their spending. As a result, businesses may be forced to close and employees may lose their jobs. On the other hand, when a financial bubble bursts, the asset's price plummets, causing widespread economic turmoil. Typically, investors are the most affected by a financial bubble burst since they have often invested substantial amounts of money into the asset that has now lost value. However, non-investors can also be impacted as the economic recession that follows can result in job losses, wage cuts, and a decline in overall spending. The conclusion of the movie The Big Short features a thought-provoking line where Michael Burry is shown to be solely focused on one particular commodity, water. This might leave you with questions and wondering what Michael Burry has been up to and how you can use his trading strategies to benefit yourself. At first, the idea of investing in water might seem strange, especially given that traditional markets have been centered around trading commodities like oil and gold. However, it's important to remember that the landscape of trading and investing is always evolving and adapting to new developments. Water has recently become a new commodity in the trading market, and if you don't act quickly, you could find yourself among those who are not aware of this new opportunity. So, keep an open mind and be ready to adapt to the changing landscape of trading and investing in order to make the most of these exciting new opportunities. The cautionary words of Burry should not be disregarded, as he has a history of accurately forecasting significant market shifts. He correctly predicted the housing market crash and now forewarns that the next collapse will be even more severe. If you want to stay ahead and escape poverty, check this video on the 15 things poor people waste money on. Thanks for watching and consider subscribing to not miss new uploads.